Good morning, guys. Hope you're doing well. Life should be a theme park, shouldn't it? Should be fun. So let's dive straight in. If it hasn't been fun for you over the last few days, then I do apologize. But what we're going to do now, I have left you alone quite some time. I think the last update was Friday. So let's get stuck straight back in. I'm going to spend a little bit longer today giving you more of a macro theory so that we can get a lot better sort of insight of where we are and what to expect. So, as you know, on the Dixie, we've been tracking this longer term, higher time frame range over here. We've been doing exceptionally well, doing our range like so. Now, what I said was once we break up above here, above the top of the range, we need to understand exactly what it is that what to expect. So, is this going to be a deviation? Or is Dixie going to power straight up through our next target, our next bullish target, and onto, let's say, for example, here, as I always show you, 50% of the fair value gap, which is actually, if I look at it, if I just eyeball it, it is exactly this SR region over here. So that's actually quite scary. First thing what we would do is we would take out these highs. um, these highs, sorry. So we would go up to that level. If it is a swing failure pattern, then obviously we can expect it to dump down and further down. However, let's have a look at the bullish stance, which is pretty scary because there's a huge amount of space between where we are and eventual higher time frame, longer, many years worth of this is the top of the channel. So that's actually where we could go. Let's map this out. What we could see is that this order block, this weekly order block, is not in fact effective, and we power straight through. So we go first thing up to our swing failure pattern, and it doesn't act as a swing failure pattern, but we claim this as support. We then target our next highs up to around this region. We then have a look to see if we can claim this 50% zone of this fair value gap that was created. Okay, that means we would be doing something like this up to that region over there, which, as you can see, is a support resistance zone. In the ultimate bear case for all of the other assets, we could in fact claim that as support and go all the way to the top of this channel over here, in which case we would be looking at some pretty bleak performance on all of the other assets. That is a much longer term, higher time frame scenario that could take quite some time to play out. We're on the daily time frame right now. Um, so that is a possibility. Is it a probability? Well, let's have a look at something I wanted to show you over here. So if I flip this on, this is Tom DeMark's TD sequential indicator. And what it does is it tells you about trends and trend exhaustion. Now, as you can see, if you have a look merely at the, wow, where did that go? If you have a look merely at the performance of the indicator on the daily time frame on the uptrends. It has had a very good track record. So as you can see, these full green 8 and 9 symbols. Let us just open this up a little bit for you so that you can see. That is a full perfected setup, as it is called in the TD indicator world. Here's one over there. There is a perfected 9 over here, which tells you where the tops are likely to be. There's a non-perfected setup here. However, it did perform very well. Here, it did give you a smaller trade if you do trade the Dixie, or if you counter trade it, which is exactly what we do. Here again, and here possibly, obviously, as they always say, past performance is not necessarily a predictor of future performance. However, what we do see here is very simple. The Dixie has been powering straight up for a number of weeks. That's pretty unnatural for, without a pullback. So we should be expecting some kind of a pullback sometime soon. What does this mean if we pull all of our theory together? we have come to the top of this range. This is potentially just a deviation before we pull back. We're also into the mid zone of this weekly order block. That's also a decent kind of an area for a pullback to be expected. So what I do what I do want to just bear in mind is that this is a potential likelihood that actually what we've done is we've seen the last of this major uptrend, and we could start to see it starting to roll over. However, the macro markets have been very weak, and we've got no bullish signals yet out of any of the other big TradFi macro markets. So like I say to you, there are a couple of pretty scary things that could still happen in terms of the other assets if you're long other assets. So just be careful. You could literally see this kind of thing happening. So that's the first zone. Here's your second zone. And you've got some further zones up here. So just watch out, and we will track that together. Now let's flip on to the SPX. As you know, I have in the past said that this could be a head and shoulders playing out, and now we've broken this neckline. Okay, what is very likely to happen, because we also got the volume characteristics and the volume signature of a head and shoulders. A lot of people just merely look at the pattern playing out. The problem is that they don't have a look at the volume characteristics, and this head and shoulders has had all the volume characteristics required for it to be a potentially successful head and shoulders. And as you've seen, this last leg down here has been pretty powerful, with some increased volume to the downside. We then broke the neckline, which is actually confluent with the value area high of this macro fixed range pull over here. So what does that mean? That could also mean that all of this was a potential deviation, or literally just a range rotation. As you've seen, this is one big range, and all that we've done is we've had a healthy range. As soon as our range comes down to the bottom or the underside of the value area low, we can expect to look for longs. And as soon as it comes to the top or above the value area high, we can expect to look for our shorts. So is this merely a large, longer term, longer time frame rotation? Let me move this up a little bit so that you can see. I might be blocking the rest of this fixed range over here. So that is what I've drawn over here. Now, things to watch out for. First things first, we have broken down below this, not a very good line, broken down below this channel that I have drawn over here. So we broke down a few days ago. Second thing that you need to watch out for is, like I've said in the past, this box here, this historical SR zone, is critical support. If we break down below that, then we can definitely, and actually test it as resistance and then come back down, we can definitely start targeting the point of control of the zone, and potentially even right down to the bottom of the value area low area where we could expect a bounce. If this all does play out, that would be where the Dixie, like I've shown you in the previous chart, is powering up towards the top of that channel, that longer, higher time frame channel, and potentially where it tops out and starts reversing would be confluent with this area over here, and we could see a continuation to the upside. What does that all mean? Well, as you can see, I've drawn out this structure over here, which essentially is a butterfly structure, butterfly harmonic pattern. It doesn't mean that this will happen. We're just going to have to track it. It is a possibility. The first stage would be us breaking down below this historical critical support zone, testing it as resistance, and then coming back down. That would be the first sign that we can expect the structure to play out. It is a much longer, higher time frame structure, which does mean the following: loads of shorts to be had for quite some time, loads of longs to be had for a long time thereafter. And this all does play into our macro framework and structure that we could potentially be seeing a new BTC all-time high in and around the 2025 year, which, as you can see, this is next year. That's 2024 all the way through. Let's pull this across. Um, obviously this C and D has not been put in yet, so this could range all the way through to 2025 odd if we pull these points somewhere, but we don't actually know what and where and how that will exactly play out. So let's just track this together. Right. So that's quite a bit of talk in terms of the macro side of things. But as you can see, all I wanted to show you is that we do have a bearish kind of a stance. If the Dixie fails to roll over. In fact, what I'm saying here is if that Tom DeMark sequential indicator and all of the other theory that I've shown you does not in fact play out, if all of that fails and the Dixie just powers straight through because of macroeconomic factors, then we can definitely start seeing this pretty awful looking situation for the longs and for the bulls play out. So let's just keep that in mind. Right. As you know, we always have a look at our perp and spot markets. So spot continues to look very Whoops, let's just do this properly. Spot continues to look very dismal. Yeah, the only thing holding the markets up right now is our perp volume and CVD, as you can see. And essentially, if I pull this across here, you can see that the perps are looking a little bit weak, starting to flag and fall over. Okay, just bear all of this in mind. So the only thing really that has been holding up our BTC market here is a little bit of perpetual interest that you can see over there. And as we move on to our daily time frame, what I said to you a few days ago is to have a look at for this supply starting to come in around this area here. That's, as you can see, the wicks, and I said that you could expect some further downside. That also was confluent with our uh, Bollinger Band top over here. Okay, so what can we expect just merely looking at this chart? A rotation down to at least the bottom side of the Bollinger Bands, which is sort of confluent with this longer term SR level over here. So essentially everything just acting as it should. One thing I do want you to have a look at is these median lines of the Bollinger Bands are always very good indicators to see and to track a trend. So what's happened here is we've broken straight through. We shanked down in this candle over here, tested the top of it, and we have continued now to see that the midline is a resistance area. So, like I've pretty much been saying over the last few updates to you, this is not a bullish stance. Continued lower highs. And essentially, what we do have is this huge triangle right here. Now, this descending triangle means that we've got less and less firepower coming up. We had a huge impulse here, less of an impulse and less of an impulse. So what could we start seeing here? And a final breakdown, perhaps? That's what these descending triangles usually, not all the time. I mean, we could actually just have a very, sorry, a surprise, and this could pop straight up over here. So essentially, let's just continue tracking this, and on the higher time frame, we are going to expect the breakdown. Okay, we also need to have a look and see and plan and expect the unexpected, and we also do need to have a plan for the upside. So let's just continue there. However, like I've shown you, everything playing out, like I've said over the past few days, bearish stance. We should see rotation back down to the bottom of the Bollinger Band area. Right. I then delineated a hugely successful SR region for you. Let this just load up. Then I also gave you on Friday a few of my thoughts and suggestions going into the weekend where I left you for a few days. It was around this zone over here. What I said was, I do expect a rotation to this SR zone over here, and that was number one. I then expected it to go down to the bottom. That was number two. I then said I wanted it to have a pretty weak rise up into around the mid zone. And that is exactly what happened over here. We got our first rise, our second, our fall over here, our weak rise into number three. I then said you could expect some kind of reaction around here and some kind of a dancing around this level. In essence, that did play out. It didn't quite get down to the zones that I was thinking, and we got our drop to number four. Then I said expect it to come back up and test this SR region over here for a final drop, quite a dramatic drop right down to our major SR level. So far, playing out pretty well. What we can expect is our final drop. What I do want you to take note of is the following. We have, let me just hide this and clean things up for you a little bit. We have this, we have this channel, okay? As you can see, top very well respected, midline beautifully respected all over, okay? I mean, it's just pretty picture perfect. And by the way, channels over the last few days have been an absolute money spinner. See this perfect respect. Not quite getting down to the bottom here. Not quite getting up to the top here. Fine. However, like I said, channels over the last few days have been very well respected. So, what could we expect now on a lower time frame? What I think before I get onto a lower time frame, let me just and into some actionable trades. Let me just show you a few more things just to build the picture. Um, let's not get too excited. I know we all want to have some nice trades on, but let's just continue having a look and building the picture. What do we see here? Just this is very busy, I understand. So let me just show you the top part here. This zone over here. That's a 5-minute chart, and all it does is I've slapped on some. So you can see a Bollinger Band up at the top here. You can see some VWAP bands over here, these areas. And the other thing to note is that you can see these liquidity zones over here. What I want you to pay attention to, so just cut out the noise. What I want you to pay attention to is these blue bands over here. What are these? What do these mean? This is taken off of the platform AGGR. It is an aggregated look at the liquidity on across all exchanges. That is on all spot and all CVD all spot and CVD, all spot and all perpetual contracts. So what you can usually see is like these bands over here look pretty normal. That's what you can expect. And how? Let me show you a few more. What are these and how do they actually play out? Essentially, what they are is you can see. Let's say, for example, that the bottom of this and the bottom of this and let's say, for example, the bottom of this, what retail traders usually do is they pick these zones and areas over here as their stop loss levels if they were going long, for example. Now, that's where liquidity builds up, and that is where the market makers, the whales, the people who essentially, I don't want to use the word manipulate markets, but what they do is they target this kind of retail behavior and these liquidity zones build up. So what you can see here is in this zone, which is where we currently are, a very unusual kind of massive pool of liquidity on the bottom and on the top side. And the reason for this is that over the last few days, the market makers have been as I like to call it, shaping the price. They're trimming it on both sides, and they're keeping us in this very tight zone and teasing and teasing and teasing. The reason they do this is to build up their liquidity such that they can take bigger trades to fill their huge orders on both sides. Now, let's have a look at the open interest. What I wanted to show you is what you've just had a look at. Let me just show you the time frame again. The time frame here is 25th onwards. Okay, so the 25th onwards, plus minus. What I wanted to show you, back on the screen, is that from the 13th on this chart, actually, you can see this open interest growing and growing. That is what market makers want and need in order for the next big move to happen. So actually, you can track it back to the 13th, where we bottomed out in our open interest. That was at around 360 odd million. We are now at around 452 odd million. That's almost 100 million delta on the Bybit perpetual exchange. Okay, so now what does this mean? We have had some pretty lethargic price action. I know people like their dopamine hits in this market. We have been scalping like absolute demons and making money in between in any event. But if you're looking for the next big move, it is starting to build. And you can see that every single time we get to a relatively decent. Actually, I think what I'm doing is I'm drawing behind my where I appear on the screen. So let me try that again for you. What I was drawing was over here. You can see liquidity in the market and open interest was pretty high. It then dumps down where you get these big moves. Okay. Every time you get a big move, you do see liquidity getting drained out the market. And that is exactly what market makers do. So what I'm trying to get to here is that you can see that the next big move is building and that we should expect something pretty dramatic to happen fairly soon. As we start building this picture, I want to continue just showing you here that on different time frames, this time frame is the 30-minute. You can see we have come below the Bollinger Band median, and it is currently acting as resistance. On the 4-hour time frame, Bollinger Band median acting as resistance. On the daily time frame, Bollinger Band median, like I've shown you in the other chart, acting as resistance. So essentially, we have a fairly bearish kind of picture. So what I would expect now, what we can do, by the way, now I've started showing you everything and giving you all of this information. I'll show you now what actionable trades we could start looking at. This is trading light. In trading light, what you can see is what I've shown you here is that these market makers, these bright white blocks here, show you that the market makers place these big walls that price can't get through. And that is why price literally behaves in the way that it does, that you can see. Now you can see exactly why price has done exactly what it's done over the last while. Market makers didn't want it to exceed this point over here. They put these huge blocks in, and what happens is retail traders cannot blast through them. So what happens? Price rolled over. The market makers did not want it to be too dramatic a drop, so they put these massive walls here. We had a little bounce, stopped this huge fall from cascading, and it just gently carried on down. They said, okay, that's about enough. Thank you very much. Put a wall, let the price come up. Here's the next wall, price comes down, etc., etc. Slowly just shaping price in this zone, as you can see. That is why, as I've shown you in the other charts, that the open interest has been slowly building because retail traders are putting more and more trades in and getting trapped with those huge bands and pools of liquidity that I showed you. So, what do market makers now have? They have pools of liquidity on both sides, which is exactly what they want. What are they going to do? They're going to clear both pools of liquidity. Where do you want to be? You want to be on the right side of the trade first. How do we anticipate this? Now, what I say is, you're never going to know exactly. So what you do need to do is to try to anticipate what the next move is. Now, it is Wednesday. We haven't had a big move yet this week. What can we therefore try to anticipate is, right, we should, at least today, the latest tomorrow, have a big move. What I believe is going to happen. We have got a bearish stance overall. We've got a very good channel to, a channel is only effective as long as it is within its range, and therefore it is still within its range. I will show you that in a second. What can we expect? The channel looks something like this. What I what I expect, you can see that there's a big wall right here. The market makers don't want it to drop yet. That's my clue to you. I think we are going to continue down because of all of the macro theory that I've just shown you. So what is likely going to happen? I think what they're going to do is they want to collect one last bit of liquidity, either in and around the zone. You can see the small liquidity that they could grab, which is based off of these areas here where smaller traders, us retail traders, have been putting their stops. That's where this liquidity is built up. Exactly the same thing over here. This high, you can see the small little pool of liquidity over here, and then again, small little pool of liquidity over here. So, what I believe is going to happen, I think we're going to get one last spike up, and we're going to dump down, where they're going to probably remove these walls over here more than likely, and we're going to see that drop down to 25.2 region. Okay. If I am wrong on that, what can you do? Exactly the reverse. What you want to do is you do want a good trade entry. So here's your channel, or you could just literally play both if you're playing the longer game and not the scalping game. Wait for your spike up here. Have a look to see where this wick, you want to see a nice wick. Have a look to see where it forms. Once you see the wick and you expect the wick into this zone over here at 26.3, or this zone over here at 26.4, could go as high as 26.5, as you can see over here, but I don't expect that based on the structures that we see and on those higher time frame SRs that I have drawn and have been perfect so far. I expect to see a little spike up. Once you see the spike up in the wick, that is your stop loss zone. And then what you do is you target down to the bottom. Okay, if I am wrong about the short, what you do want to see is you don't want any kind of bearish market structure to continue. What you do want to see is you want to see a continued structure upwards. And if you do see that, and you do see us breaking out of this channel, and we do start to claim this 26,370, if we start to claim it, then you can start looking for longs. Okay, so you actually do have now plans on either side. Right, let me draw that out for you. Your shorts, you are looking for something like that. Okay, like I said to you, you do want to see, you don't want to see us starting to claim these levels over here. You want to see your spike into this resistance zone over here, just coming out of this channel and then slamming back down again. So that is your trade over there. And you take it all the way to the bottom here. your take profit areas, if you really are aggressive with your TPs, there is some liquidity over here that has been built, so you can take some profit over there. Next TP, if you're very aggressive, is over here. Then your next TP zone would be, if you eyeball this, you can actually see where the point of control of this area and zone is. If you're not lazy, you can just simply do that. And then that is your point of control right there, which is 25,850 odd. Okay, that is your next TP zone. And then of course, right down at the bottom over here. So that is your short idea. Your long would be as follows. Your long would be as follows. Let's make this a little bit bigger so it's easier for you to see. You want to first see this area being claimed, and then you want to continue up. Okay, so therefore, once you see this area being claimed, this this SR region over here, then what you're going to do is you're going to take that as that I just drew out. Okay, that is going to be your stop loss over there. Right. Your TP zones, like I've shown you in the past, obviously this is a very good area, which is 26,750. Your anchored VWAP is another TP zone, and of course you've got this downtrend zone over here. I think that would be pretty much your final TP for that trade. So essentially, what you'd want to do is you want to target something up there like that. Okay. Oops. Let's just move that back. All right. I think that's pretty much it for today. Have I shown you everything? I pretty much have shown you everything. Yes. Now, what I'm going to do is now give you a little update on our trading challenge. We've got 4 participants so far, 4 out of 10 for our trading challenge of zero point 0.1 BTC to a full BTC. I need you guys to give me some support. If each of you, we've got 4 people, if each of you recruit somebody, you can have, let's see, we're going to be at 8 out of 10. That's very, very close. I know there is some fair excitement out there. What I'm going to do is I'm going to show you day by day, literally going to be giving you every single little update, every scalp, every day trade, and every swing trade that's possible. And we are going to build our accounts together. So come on, give us some love. Go and get some people out there. Let's start this challenge and let's have some fun. Thank you very much. Catch you in the Discord and have a great day and great week.